Business owners, to me, they're a tough breed. They negotiate everything down. They want to understand why they're paying somebody fees. I'm sure you get a lot of
course.
pressure the same way I do with legal fees. So what's the answer to that?
Well, I don't know if it's, well, first off, sometimes our clients want to be able to make capital gains or growth in their portfolios irrespective of market conditions. So what does that mean?
Right, so exactly, what does that mean?
So that means you have to be a bit more thought-provoking on where the markets are today and perhaps how you should be more tactically allocated accordingly. You know, this notion of being step by step with the market every month, quarter, year, I think is kind of is risky, definitively risky. Maybe we should be looking at it over 3 and 5 year periods and saying, you know what, when markets were too high, my advisor, because he's a student of finance and has watched the markets for years, has reduced my exposure. I didn't lose as much when the markets went straight down, and I was able to put some capital to work at lower prices. So that notion of tactical allocation, of being more proactive rather than just simply mindfully investing in the market. The other thing I think it's important to understand is that, as I said earlier, because there's been so much money flowing into passive index funds, think about what goes on there. It's an indiscriminate buy of securities that are the largest securities in the index. There's never a question of saying, maybe things are a little bit too high right now. Always buying, which in a sense keeps those stocks moving higher. So you have a market that's being almost artificially pushed higher. What happens when those same investors want to get out? That could become a stampede.